Hi everyone, Nathan Jennison here, the Mortgage Architects, and responding to the question we get asked a lot, when is the right time to do a refinance? So there's a couple things I want to say here. One is it's impossible to really time the market. You might get lucky, you might get the exact bottom of it, but it's difficult to get in exact, a best scenario situation. So ultimately what you want to do is you want to refinance as rates come down because you never know what's going to happen in the world that's going to cause rates to go back up. For instance, if inflation becomes a very sticky situation, that could be something that would cause rates to be high and elevated for a long period of time. So the other thing, though, in terms of looking at this, let me show you what not to do when you're doing a refinance. If we're looking at these options, we have a current, let's say we have a current mortgage and the property is at 650,000. We have a loan amount of 413,000 and we have a interest rate of 7.625. What we don't want to do is get too aggressive on dropping that interest rate. So we don't, in this case, we're dropping it a full percentage point. But the problem here is this. We're going from a $413,000 loan to a $422,000 loan. We do not want to add a lot to your loan because what happens is rates will likely continue to fall. And if they do, then you're going to continue to add to that loan amount, which is going to cost a lot of time, a lot of money as time goes on, both on your monthly payment and ultimately, and you're going to lose ground in paying off your house. So avoid this scenario if at all possible. What you can do is be a little less aggressive on rate. And so in this situation, we are cutting it by 5/8 of a point, which is good. That's $180 a month savings. Now, when you're looking at this, you might be saying, well, we did still add to our loan amount. We went from basically, we added about $3,000 to it. But here's the thing. When you do a refinance, number one, you usually are going to skip a monthly payment. You can make that additional payment into this loan, which is $3,421, and you're automatically back to your current loan amount. That's one aspect of it. The other is this. Your new lender is going to have to collect, and what's not being shown here is the new lender is going to collect escrows to be able to make that tax payment when it comes due and to be able to pay homeowners insurance when it comes due. And so ultimately, that money right now is what you're seeing here as raising that loan amount. The thing is that the old lender that you're replacing, they're going to give you a refund for those escrows. When that money comes in, simply add that to that first payment or that second payment whenever you get that money, and that will further buy down this loan amount and save you that time. So that way, over time, what's happening is you can actually be lowering that loan amount while you continue to do refinances and basically follow the interest rates down. That is the ideal way to do it. You can refinance every essentially 6 to 7 months. So after you make six monthly payments on that new loan, you can do this process again and again and again. And that's one of the ways in which you can really fall, you can lock in a lower rate as time goes on. The other thing that also to keep in mind is this cash out refis. If you have a high amount of credit debt, if you have interest rates that are in the 20s to almost 30%, even if you're hanging on to a relatively low interest rate on your mortgage, you probably would be better off to do a cash out refi, pay off that high interest loan, and then do the same thing here, what we're talking about, then refinance down as rates fall. We're probably not going to get back into the twos and threes. That's probably not likely, but you will probably do yourself a huge favor and save a ton of money by doing a cash out refinance because it'll save your credit and it'll give you an opportunity to get on a strong footing again. If you have any questions, you want to see what your scenario looks like, let us know. We'll be happy to build that out for you. We'll talk to you soon.